transaction. The moment a business activity has taken place and there is a document to that effect, there's an evidence of that particular business activity or business event, we'll have to record. And these are some of the books that we use to record these transactions. Answer. Good. So we are saying that when you record the transactions from the source document onto the ledgers, onto the journals, then from the journals, it goes to what? The ledgers. So from source document, it goes to the journal, then from the journal to what? The ledgers. After the ledgers, we extract a trial balance. And it's the trial balance that serves as the foundation or the basis for the preparation of the financial statements. Without the trial balance, it will be very difficult for you to prepare the financial statements. So we are seeing that ledgers are books which contain a condensed and classified record of all the pecuniary transactions of the business, generally brought, transferred, or posted from the books of original entry. Also called the king of all books. The king of all books is what? The ledger account. Because all entries from the journals must be posted to the various accounts in what? In the ledger. We'll come and look at it one by. The ledger has some of these characteristics. It has two identical sides. We have the left side and also the right side. Good. The left side, as we've seen earlier, is the debit side, and the right side is the credit side. Now, the difference of the total of the two sides represent the balance on the ledger account. If the total of the two sides are equal, then there will be no what? Balance at the end of the day. Good. Usually, balance is drawn at the end of the year and recorded on the deficit side to make the two sides equal. This is known as what? The closing balance. So we have closing balance and also opening balance. The closing balance for this year becomes the opening balance for what? This year. Thank you. The closing balance for the current year will be the opening balance for the next year. These are some of the advantages of a ledger. It's the ledger through which successful application of double entry system of bookkeeping is ensured. Complete and reliable information is available in respect of each and every account. It is possible to ascertain the amount of income and expenditure under each heading and overall results at the end of the year through trading, profit, and loss account. Good. What are the types of ledgers? We'll look at them already, but let's look at it. A ledger contains details of all the assets, liabilities, capital, income, and expenses. So we have the subsidiary ledgers. So we have the sales ledger. What is sales ledger? A book. Sales ledger is a book that contains what? The accounts of all our customers, personal accounts. Then purchases ledger for personal account of all our suppliers. Then we have the main ledger or the general ledger for all other double entry accounts. Good. Yes, sir. And when you are through with the recording from the source document onto the journal, then you now transfer from what? The journal to, we'll come and look at it. There are questions there, so we'll come, so relax, Good, relax. There's a saying that don't drink the soup before what? How they call it? Good. An account. What is an account? This one. Is there an account is an explanation, a record, a summary of a history of a similar or a particular transaction or event. Good. and that it's a standardized format that organizations use to accumulate the monetary effects of transactions on each financial item or financial statement item. That's an account. So if you say open account for this person, we want to look at the transactions between our organization and that particular person. Good. And that account is also a tool for summarizing transaction or transactional effect for each account, determining the balances and drawing inferences about the company's financial activities. These are the types of accounts that you have. And we should know them in accounting. You should know them and play with them so that when accountants are using it, you also play with it. And they will say, this IT man, he knows accounting. Accounts, we have personal accounts and what? Impersonal accounts. So if you take accounts in general, we have personal account and impersonal account. We have, under the personal account, we have the debtors account, or what we normally refer to as receivables, receivables. So you go to some organizations, they say, oh, this is the head of what? Receivables. This is the one in charge of all our debtors. So there are some accountants, in fact, chartered accountants. They are just in charge of what? Debtors. That's all that they do. Chartered accountants. You go to some organizations, yes, I'm telling you, some organizations, all they do is that they are in charge of what? Debtors. That is all their work, and they are the head of receivables. And we have it here in UDS. So we go to central administration, and then we say, oh, this is the head of what? Receivables. He's the one in charge of all our student debtors. So whatever information we need about student debtors, we only go to the head of what? Receivables. So under the personal account, we have debtors account or receivables. We also have what? Creditors account or payables. So in some organizations also, you have what? A particular department that is what? Payables. We have a head of the payables unit. Why do we say these are personal account, debtors account and creditors account? Why do we say they are personal accounts? Yes. Why do we say they are personal accounts? Yes. Oh, thank you.
Because the accounts of individuals.
Thank you. It contains the account of what? Natural persons. Natural persons. Those that we buy goods from. They are not artificial human beings. They are natural persons. So it contains the account of all natural persons. Those we buy from and those we also sell to. Good. Then we have impersonal account. Impersonal account. Under the impersonal account, we have accounts that are real account, and also what? Nominal account. Real account are accounts that are tangible accounts. Accounts you can see. Accounts you can touch. Accounts you can feel. They are real accounts. That's why if you take, for example, land and building, can you see land? Can you touch land? Can you feel land? It's real account. Motor vehicle, can you touch it? Can you feel it? It's what? Real account. So all the accounts that you can feel, you can touch, they are tangible. We normally refer to them as what? Real account. What is the question? There's a question on the floor.
Where can you place business accounts between nominal and real account? Where will you place business account?
What kind of business account? When it comes to impersonal account, we have real account and nominal account. Nominal account, they are accounts that appear in name. They exist in name, but not in nature. Are you okay? They exist in name, but not in nature. These are nominal accounts. For example, rent. Can you see rent? Can you see rent? They appear in name, but in reality, in nature, they do not exist. But when you take building, building appears both in name and in what? Nature. You can see it, you can feel it, you can touch it, and so on. So we have a building account, we have what? Motor vehicle account, we have furniture account, and so on and so forth. All these accounts are real. The ones you can feel and touch, they are real accounts. They are not personal accounts. And they fall under impersonal. So under impersonal, we have real accounts and also what? Nominal accounts. Real accounts are accounts that are open for particularly assets that you can see, you can feel, you can touch. Nominal accounts are accounts for particularly expense accounts that exist in name but do not exist in what? Nature. So they all fall under what? Impersonal what? Accounts. Good. Now, we come to Senior's question. Senior says, how do we post transactions from the journal to what? To the various ledgers? This is the framework. This is the framework of how you can post transactions from the journal, particularly when it comes to credit transactions. So, take for example, credit sales. Each sale is posted what? Separately. So, when you write your sales day book or you write your sales journal, sales journal, we said it is a book of original entry. Look at this. We say it's a book of what? Original entry. Good. Book of original entry. Now, when you write the sales journal book, at the end of the day, you post the total transaction into the sales account in the general ledger. No, that's number one. The total of whatever you have in the sales journal is posted to what? The general what? Ledger. Then you come to the sales ledger. We say that the sales ledger is a book that contains the account of individual what? Customers. It's a book that contains the account of individual customers. So anytime there is a sales, what do? You debit their account because they are owing you. And anytime there is payment, you credit the account. But let's understand at this stage that sales ledger contains the accounts of all our customers. So that's about sales. Yes.
That's an organization post. Are they impersonal or personal?
It says businesses that what? Yes, we have looked at it. And we are saying that, for example, we have ABCD Company Limited. Let's go back. What do we say are personal accounts? Accounts receivable and also accounts what? Payable. When we say accounts receivable, what do we mean? All those who owe us. When we say accounts payable, all those we owe. So in this guy's question, where will this one fall?
Businesses that an organization owes.
Businesses that an organization owes.
Under impersonal or personal?
Are they under impersonal or personal accounts?
Anytime somebody is talking,
The that organization owes. How do we refer to them? They are what? Our creditors. Where will this be found? It will be found where? So, it will be found under what? Personal what? Account. Yes, it's personal. Those that you are owing, we say that what? They are your payable creditors account. Those that you are owing. Yeah, creditors. And those who are owing you, they are what? Debtors or receivables. We are yet to receive from them. So, senior, they all fall under what? Personal. Good. So these are postings for returns, return inwards, return outwards. Good. Then for the balancing, we talk about balancing the account already. And these are how to balance the account. And types of balancing, we have a debit balance and also what? Credit balance. When we say debit balance, what do we mean? If the debit side of an account is heavier than its credit side, the balance is called. When we say credit balance, what do we mean? If the credit side of an account is heavier or is more than its debit side, then the balance is called credit balance. It's very easy. Now, these are some of the important things that we need to know under the accounts. Normally, capital accounts carry what? Credit balance. Asset accounts usually normally will have what? A debit balance. Then liabilities account will have what? Credit balance. Expense account will have what? Debit balance. And then incomes account, all incomes account will have what? Credit balance. So you should know some of these things. Now, when we come to the calculation, it will be very easy for all of us. So when you are through with balancing of your account, then you will now extract the trial balance. We'll come and look at it. So we're saying that trial balance is a list of all credit and debit balances on the various accounts of a particular point in time, usually shown in the debit and credit columns. The sum of the debit side of the trial balance and that of the credit side of the trial balance should what? Agree. Under normal circumstances, it should agree. Good. But there are some instances where the trial balance will fail to agree, but accountant will force the trial balance to agree. And there's what we call, we'll put that particular difference in an account called suspense account. Good. But you know, at our level, we don't want to go deeper into some of these things. Otherwise, the babies in the accounting will cry. Good. These are some of the benefits. It helps in identifying, detecting bookkeeping errors. Good. These are some of the benefits. And these are some of the questions. What are the advantages of having different journals? What are the difference between trade discount? Good. We didn't talk about it. What is the difference between trade discount and cash discount? What is the difference between trade discount and cash discount? Yes. It will come in the exams. Yes. What is the difference between the two? You know a discount. What is a discount? What is a discount? Come again. A deduction, okay. A deduction or a rebate from our original price. Good. So what is the difference between trade discount and cash what? And cash discount? Yes.
From the cash discount, you get the reduction in cash.
Okay.
And the trade discount, Yes, the
Quantity. So when you buy in bulk, when you buy in bulk or you buy in large quantities, you are giving a trade what? Discount. But when you buy and you are making prompt payment, cash payment, then the discount they give to you for cash on the spot is what we refer to as cash discount.
Trade discount.
Oh yes, why not? Buy one, get one. Is it trade discount or cash discount?
It's cash.
I have somebody to say it's a marketing strategy. Buy one, get one free. But you are paying cash. You are paying cash. And the focus is on getting cash. Yes. So it's cash. Good. Now we are going to play with this question. And then we'll get the understanding better and clearer. It says that write out the following transactions in the books of Sankofa. We are going to open accounts. This one we are going straight forward to opening of the accounts. Good. Before you open the account, you need to identify the accounts involved in the transaction. And we are saying that for every business activity, business transaction, or event, there are two major accounts that are involved. There's one that is giving out, there is one that is receiving. And you need to know. One, started business with cash of 8,500. What are the accounts involved? We need to ask ourselves. What are the accounts involved? What are the accounts involved here? Senior. Okay. Is it? Okay, there's one here, capital and Sankofa. Another one say capital and what? Cash. What about you? What about yes? So when you are opening the accounts, we have started business with cash, 8,500. 8,500 Ghana cedis. Who is starting the business? Sankofa. So the account in the name of Sankofa, the proprietor, the owner of the business, is what we normally refer to as what? When the owner of the organization is injecting funds, money into the organization, that money is normally called what? Capital. Are we okay? It's normally called capital. So in this case, capital is given to what? Capital is given to cash. So what do we debit and what do we credit? Remember, the basic principle, the double entry, the basic double entry principle says that debit the receiver and credit what? The giver. Are we okay? So number one, identify the accounts involved in the transaction. That is one. Now, once you identify the accounts involved in the transaction, then you now apply the rules. You ask yourself, who is giving out to who? So if we are starting a business of 8,500, we are saying that capital is involved, cash is also involved. What do we credit? What do we debit? Yes. What do we credit? What do we debit? Yes. There is a woman here and there is a man here. Who is the man and who is the woman? Yes. And also the women, they like what? Cash. So the woman here is what? Cash. And the man is what? Sankofa. So if you want to open the accounts, so know that this is our credit and this is what? Our debit. So this is our capital account, and this is our what? Cash account. Capital account and cash account. Good. So started business of 8,000. What do we credit and what do we debit? We credit what? In the name of what? So this May what? May 1st, eh? Good. So we see cash. How much? 8,500. And then we come to a cash account, and we are saying that our cash account is increasing from 0 to 8,500. So on the 1st of May, we are receiving from capital 8,500. You see that it's very easy. The next transaction, both goes on credit from Yao. How much? So 400 and what? 20. What are the accounts involved in this particular transaction? Yes, Ajay. Come again. Okay, Ajay says purchases account. And what? And Yao's account. Purchases account and Yao's account. Do you agree with Hadia or disagree? Yes, Senior. Okay. Senior purchases journal. Yeah, we are talking about accounts. We are talking about accounts. So number one is purchases account and what? Yao's account. Yao is given to purchases. So we open the account. So learn how the accountant do it, so that you appreciate their work. When they are demanding for big salary or bigger salary, then you say, oh, accountant, they do a lot. So let's give it to them. Let's give it to them. Good. So we open Yao's account. Debit. You have debit, sorry, this is credit. And then this is debit. And the date is what? May 2nd. Who is given to who? Yao is given to what? Who is given to who? Who is receiving? Hey. That goes on credit form. That goes on credit. Yao is It's good. It's good. You will understand and know what the accountants do. So who is now giving to who? And we say that when someone is giving out, what do you do?
Credit.
Hey. Today, we'll force some of you to do accounting. But don't worry, we just want you to understand what the accountants do. But this is not to fool anybody. So when you are demanding for a particular information from accountant say it's not ready. You should understand him. You should understand him. Are you okay? You should understand him. Yes. So we are saying that we are buying goods from Yao on credit. So we credit what? Yao's account and debit what? HSS. Good. So debit the receiver and what? Credit the giver. So here Yao is giving to purchases. So on May 2nd, good. We say purchases. How much is it? 400 and what? 20. Then you come to purchases account. We have Yao. That's May 2nd. Yao. How much is it? 420. It's very easy. Now, rent by cash, 200 and what? 10 Ghana cedis. Paid rent by cash, 210 Ghana cedis. And we ask ourselves, what are the major accounts involved in this particular transaction? Rent and what? Cash. Thank you. And you people, you know everything. You are all accountants. Good. So rent and cash. Already we have our what? Cash here. So who is giving to who? Or who is receiving from who? Good. You people, you know everything. So we credit which account? We credit cash account and what? And debit what? So you see that all of us can become accountants. This one, can you be an accountant? Yes. Can you go and challenge your accountant in the office? You can go and challenge your accountant in the office.
So this one where the credit.
So you see that it's very easy. So May 3, we have rent. How much? 210. Then you open your rent account. Credit, debit. This one is credited here, so we debit in the name of what? Cash. So May 3. Cash. That's all. So with this understanding, how can you feel accounting? Huh? Feel. You will not feel. Now we paid 6,000 of the cash of the business into what? A bank account. Yes. What are the accounts involved here? Bank accounts and also what? So what are we crediting and what are we debiting? We are doing what? We are debiting bank and crediting what? You are fast. But this one, in the exam, you see people sweating. Everybody is getting it here. Oh. But you let it come in the exam, you see how people will be sweating. You see people will be confused. Good. So, we open bank accounts. So, we say bank account, credit, debit. What do we do here? Our cash account will be what? Credited. Which date is that? May 4th. With what? Bank of how much? 6,000. So bank account will be what? Debited May 4. And then we'll have what? Cash of what? 6,000. If you can do this, why wouldn't we qualify you as a chartered accountant? Yes, senior. Yes. So if you are, that is if you are operating double, what do you call it? Double column cash book. It can be a contra entry. So you are crediting one and debit. So that's good. Double entry cash book. So we have one column for cash and one column for what? Bank. Here too, one column for cash and one column for what? Bank. Good question. So here we will credit here with what? 6,000. The same, then we'll come here and debit the bank with what? 6,000. Contra. Thank you. You are accountant. The way I look at your face, you are running away. This guy is an accountant. He's running away. So fine. So that is perfect. Good. So when you have a double column cash book, this particular transaction is a contra. We call it contra. That is the technical name. But because we are babies, and you understand, because it's a chartered accountant. Are you not a chartered accountant? Hey, you are not chartered. Okay. Thank you. So now we have the next transaction talks about what? Sold goods on credit to who? David. Sold goods on credit to David. What are the accounts involved here? Sales account and what? David account. So who is given to who? Sales is given to David. Sales is given to David. Good. So what do we credit and what do we debit? So sales account and what? David. Good. You know that. Come again. The online. They don't, oh, is this not?
No, he's sharing the board.
No, you see, if I share both, it will not. This
side
side
will not be clear.
But they
Don't
have
they have the slides on the?
Don't they have the slide?
No,
Ah.
no, this one is a new one. You have not given us.
Ah.
After the recording, you are trying to. You can use it another slide.
So if we could get the slide.
If the slides was on the page,
Can you put it on the?
Just like this morning.
You put it on the page.
It's on your.
Oh, okay. Then pick it.
Thank you very much.
This morning. We share.
they didn't complain.
You don't come. So that they can.
We can't see the questions, so I just making a selection.
So we are going to share the Slides on the platform.
On the platform. Thank you very much.
We are ready to answer the question.
So please, if you want to contribute or ask questions, get a mic so that those online can also benefit. Are you okay? Good.
Everything you want to ask.
Yes.
So now it's on the list.
The person, we are seeing the solution. You are the one at the first. So, if I see we're sharing this slides. One. Then he now knows his share.
Hello. Good. Let's continue. So we are saying that the transaction on May 5th, the transaction that was undertaken on May 5th, is saying that so goods. Come again. Number. I think that's the last 22 or 23. Yeah, it's 23.
23.
Yeah, slide number 23. Yeah. So goes on credit to David. And we are saying that the two accounts involved here are sales and what? David's account. Good. What do we debit and what do we credit? What do we debit and what do we credit? We credit what? Sales, and then we debit what? David. So May 5th, we say David. How much? 192. Then we'll come to David's account, where we have sales 192. This David's account, will it be found in the general ledger or the sales ledger? Where can you find this account? Will it be in the general ledger or the sales ledger? Hello, are you with me? Where can we find David's account? Will it be in the book that contains the accounts of all our credit customers, or the book that contains the accounts of other transactions? We have the general ledger, the purchases ledger, and also what? The sales ledger. Where can we find David's account? Will it be in the general ledger, sales ledger, or purchases ledger? Hello. A course answer is what? A course answer, everybody. Again, to come in the exams. Yes, it's correct. Sales ledger. So David's account will be found in what? The sales ledger. Where can we find the sales account? Where can we find the sales account? It will be in what? The general what? Ledger. If you know these things, then you have passed already. Yes. The accounting is very easy. But the accountant will make the things so wondrous. Now, both stationery was 25 cedi, paying by check. What are the accounts involved here? You know, we are just playing with the accountant, their things, eh? So don't worry. But good. Why not purchases and bank? Are you getting there? Well, look at the first one. The first one we talk about what? Both goods on credit from Yao. And we said the accounts involved are purchases account and also what? Yao's account. Good. Now we are here. We say both stationery, what 25 paying by check. And we are saying we have the bank account and somebody is saying stationery. Why not purchases? I know. The goods have been qualified. So when the transaction says, oh, we are buying goods, it means that is what they are trading in. And for that matter, that becomes your purchases. Hello? Are you getting the whole argument? You should understand it very well. The difference between purchases and other kinds of what? Purchases. If you buy stationery, if you buy motor van, they say both motor van and both goods. They are two different things altogether. The moment you say both goods, that should tell you that this one is what? Purchases. Are you getting it? It is both goods, purchases. Sold goods, sales. Both goods, sold goods, purchases. But if the goods are not there, as Senior is saying, then what is it that they have bought? The thing will be there. So you say bought stationery, specific. I tell you that we are buying stationery. And so stationery account is there, and it is through the bank check. And you know, we normally use check for the banking what? Transactions. So the major accounts involved here are the check, the bank account, and also what? Stationery account. We ask ourselves again, what are the principles here? What are we going to apply the principle? Who is giving to who? Who is receiving from whom? Who are we debiting and who are we? Thank you. Yes.
Somebody asking why are we mentioning bank instead of check, because there is no bank inside
So there is a question on the floor. Why are we saying it's bank and not check? So should we open check account? We are saying that a check is one of the source documents. Are you okay? A check is one of the source documents that we use in banking transactions, banking activities, and so on. If you go to the bank now, you want to withdraw, you can't just go to the cashier and say, cashier, give me money. And cashier will say, look at your pay and say, how much do you need? And say, I need 10,000. Then cashier will they give you 10,000. No. Are you okay? Good. So the moment you mention check, it tells you that the transaction is undertaken at the bank. So in this sense, we are going to credit our bank account and debit what? And debit what? Our stationary account. Yes, senior.
I want to find out, can the accountant have the discretion of lamping up, let's say, he bought motorbike, car, bicycles, and so on. They are all vehicles. Does he have the discretion of lamping them up as vehicle, open a vehicle account? Or he just have to narrow it down to the various accounts?
If I get you right, you are saying that a motorbike is also a vehicle. Is that what you are saying?
The car is also
And a car is also a vehicle. Bicycle is also a vehicle. A ship is also a vehicle. Everything is vehicle. We cannot put all of them together. Can we put all of them together? In the public service, I think the last time I said it, we have what we call asset what? Register. Hello. How many of you have been hearing of asset register, asset register? So, thank you. So it's a register that contains details of all the assets, individual assets that you have in the organization. So if you are preparing an account, you bought, let's say, motor vehicle. It must be specific. In fact, some organizations even go to the extent of opening accounts for individuals, even though we have different vehicles. We have Toyota, we have Nissan, different brands of vehicle and so on. Some even go to the extent of opening separate accounts. But at a point when you have to sell a particular vehicle, you need to go to that particular account and then create a disposal, credit that account if you are selling it, and so on. So you can't just lump all of them together and put it under. No. No. We need to create a separate account for each of them. Yes, madam. Oh, sit down, don't. The online people want to hear what madam is saying. Yes.
Yes, I'm asking on the arrangement of the accounts. I can see that like capital is up, cash is down, like below it. Can you also arrange it by the side and it wouldn't affect the presentation?
Can you
like in an exam situation, you are given a question like this, then as the way you have arranged it, I decide to put maybe we bought goods or
the entries are correct. There's no problem at all. Our interest is in the entries. Are you okay? Are you debiting? Are you crediting? And is it correct? Perfect. If it's correct, forget about the arrangement. Somebody can bring you out first and whatever. The issue is that do we have the entries being correct? If it's correct, then you are good to go. You don't have any problem at all. Are you okay? Are you accountant? We are not to go there and confuse. You know, and then is it the way we are moving? We are moving at a very slow pace. Because of the big things. So you can't just move. You know, when we are teaching corporate reporting, that's the advanced form of financial accounting or financial reporting, we don't do it like the way we are doing here. Oh, no, this one there. What we are doing there, we are just trying to play with the issues here. No. So when we are teaching financial reporting or corporate reporting or advanced issues in accounting, with those who are doing the MPhil and the MSc and all that, that one, that those who are specializing in accounting, that one, we don't do it like this. This one, what we are teaching is accounting for non-accountants. So you need to take your time. You need to take your time. Come again. You like it like this, eh? So particularly, honestly speaking, in the exams, for example, you might not be required to go to this extent, but you just have to understand. That's what I'm saying. So in the exams, I will tell you what you need to organize yourself for the exams. Are you okay? When I should bring this one in the exam. So do you understand this? Do you understand the whole? So when you say bought stationery is different from bought what? Goods. Are you okay? When you say cash sales, what are the accounts involved here? Cash and what? Sales. Cash and sales. These are the two major accounts involved. What are we debiting and what are we crediting? What are we debiting and what are we crediting? Debit what? And then credit what? Sales. So at this point, I believe we all understand the double entry principles.
Yes.
Do you understand? Good. Yes. Yes. We can buy stationery on credit. So if, for example, we are buying stationery on credit, then we need to know from whom we are buying the stationery, so that we can open account for that person. Anytime we pay the person, we debit the person's account. Are you okay? Good. So I will not want to continue with this. So far we have understood this one, let's move on, because some of us here, we are so much interested in the exams. So we'll do something small, then we'll come to the exam issue. In the exam, we should be expecting something like this, which I want us to discuss. That one, if you decide not to write, then it's your own cup of coffee. So if you are interested in the exams, then you should be looking at something like this particular question. Is it that from the following statement, which give the cumulative effect of individual transactions? Listen very well. I'm ending here because the board is not big and then we can't do all of them. Are you okay? Good. From the following statement, which give the cumulative effect of each individual transaction, you are required to state as fully as possible what transaction has taken place in each case. It said what transaction has taken place in what? Each case. There's no need for you to copy out the table, what we are going to see. It says that, listen, the first column, this one is just to give us a deeper insight into all that we have been talking about the activities of accountants. The first column of the data gives the opening position. Listen, each of the other column represents a transaction. And it is this transaction A to Z that you are supposed to describe. You are supposed to describe. Good. Come on, you are just here for exams. So in an exam condition, you can have something like this. Or you may have something like this. Or you may have something like this. Oh, don't squeeze your face. This one is very easy. You see it like this, but it's very easy. It's very easy. This one with it is very easy than opening accounts like this, where my good friend will say some of you will be jamming them up like that. Now look at it. I believe we can all see. Good. Look at the transaction. These are the transactions. And look at the columns. Column A, B, C, D, E, F, G, H, and what? Now, this is the base. And then we have A. Look at it very well. We are going to analyze the kind of transaction that has taken place here. And then we will just write it in our own words. That is all. This one, you are not going to open any account. Where do I debit? Where do I credit? No, 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 no. You look at it and ask yourself, what transaction is this that has taken place in this particular, on this particular column? Look at column A. Now take the assets, land and building. The base at the beginning, we are 450, column A. Has it changed? Do you have any change there? Good. Now look at motor vehicle. What is the value for motor vehicle? 95. What is here? Any change? What has happened? It has what? Increased by what? By 5. It has gone up by 5. Good. Remember, we are saying that for every transaction, there must be debit and credit, one giving out and one receiving. So what does it mean here? If motor van has gone up by 5, what has happened? Addition. Good. It means that there is a subtraction somewhere. Are you getting the whole argument? Something has gone down. That is why this one has gone up. What is it that has gone down? Let's look at it and see whether we'll see any change here. Now, office equipment, look at the base. Any change here? What about stock? Any change? Debtors, any change? Bank, any change? What has changed? So what does it mean? Come again. Bank has gone down, and what has gone up? Motor vehicle has what? Gone up. Motor vehicle has gone up. By what? 5. So how are you going to put this in your own language? This is a transactional language that you now have to put. Just like the you see, both goods on credit. Are you getting it? There's a transaction that has taken place here. Look at it. Motor van has gone up by 5. And then bank 2 has what? Come down by what? 5. How are you going to put this in your own language? And with this one, every answer you give here, so far one is increasing and decreasing, is correct. No, they're talking about debit or credit here. They're just, you don't understand. You get a argument. So there is no specific way of putting it. But so far you can identify, so this one is going up and this one is coming down. And you mention the 2 accounts, then you are good to go. Do you get the whole argument? So how are you going to put it? Yes, my dear.
Okay, what motor vehicle? By check for 5 6.
And you are there. He said, we have motor vehicle using what? Check. through the account or bank. That is all. So in it, we can see motor van. In it, we can see what? Bank. My friends, this is not clear. You are not telling me what you have said, or you are not telling me what we are saying. There is a change here. Senior, look at motor van. Motor van has gone up. Land and building. We are looking at the changes that has occurred in column A and the B's. Are you okay? Good. If you take land and building, look at it. How much is here? 450 at the beginning. And let's say at the end, we are 450. At the end of the month, we are what? 450. Is there any change here? No. Motor vehicle, 95 at the beginning of the month. Then at the end of the month, we have what? 100. Is there any change? Negative or positive, up or down? Up. What does it mean? We have added. It means we have bought new motor vehicle. How? If you are buying, either by check or by what? Cash. That's what normal. So we should be seeing some kind of what? Changes in any either cash or what? Bank here. So when you look at it, office equipment remains the same, stock same, debtors same. But look at bank. Bank has also what? Gone down by what? By 5. What it means essentially is that we are taking money from our bank account to purchase what? Motor vehicle. So our bank account is reducing by 5,000, and then motor vehicle is increasing by what? 5,000. So how are you going to narrate this story? That's what we are saying. That, oh, we have spent what? Bought motor vehicle with what? 5,000, motor vehicle worth 5,000 from what? The bank account or by check. Bought motor vehicle 5,000 Ghana cedis by check. Hello? That's somebody's narration, and the person is correct. So the two issues are here: motor vehicle and bank or check. And when you write like that, you are okay, you are fine. Yes, madam. You need to open account in this thing. You just write and say bought motor vehicle worth 5,000 paying by check. That's all. That's why you get the amount. Oh, bought motor vehicle 5,000 paying by check. Or we are still not getting the whole argument. Perfect. So our bank account, our money in the bank is reducing by what? 5,000. And that is the money we are using to pay for the motor vehicle. You are not clear. Thank you. In the exams, just write like that for me. I want to see that. I want to see the bank and also what? The motor vehicle. Hello. All I want you to understand, you know, that in the first instance, we are looking at what? The transaction. Okay. This is the narration, and we are converting it into accounts over here. Are you okay? And I'm saying that we need to understand this one. Good. But in the exam, because majority of us have did this, if you say we should do this one, for what? Are you going to be doing this in your office? I don't know if you are getting the whole argument. Make life easy for you in the exam. That's why I'm bringing this one. That in the exam, you should be expecting something like this. Or you don't like this one. I want me to make life comfortable for you in the exam. We don't want that to be easy for you in the assembly. Jam. Come again. So when you take A, I mean, look at this. I don't know. Look at it. Okay. You are even lucky. The solution is here, cry. Look at it. Both motor vehicle 5,000 paid by what? Bank. That is under A. So you only put A there. This is very easy. In fact, I will delete the solution, cry. Next, I won't put the solution there. Okay. Yes, senior. You are talking about solution. What has happened?
The load.
Eh?
I'm not seeing the corresponding.
You when we get there. You are going too fast. All right. So please understand what we are doing. Are you okay? So this one, you are only narrating the story. What is it that has happened? So column A, you pick column A, you look at the changes that has occurred, and then you narrate the change in your own language. Don't copy me. Mother, delete the solution. Don't copy that. I delete it in the state. Anyway, hey, the solution is just a guide. If you don't know, you copy verbatim. So you understand what we mean. Are you okay? Good. So we are through with the A column. We have to go through the rest. Any change here? No. What about here? No. Any change? No. Aha. Then take column B and compare it with what? A. The first one, land and building. Any change here? Motor vehicle, any change? Office equipment, any change? Stock, any change here? Debtors. Bank, any, okay. What about cash? What change here? The cash has what? Reduced by what? Perfect. Now let's go. We will definitely see the corresponding entry. Then capital, any change? Loan, any change? Creditors, any change? What has happened here? What's the difference? So now tell us what has happened. Cash has gone down by 4. Creditors too have what? Gone down by 4. What has happened?
What goes 4,000 by cash? It's cash.
No, are we buying at this time?
Then you are paying by cash.
We are paying our what? We are paying our creditors. So, hey. Where's my bag? Yeah. Charlie, let's plug this in. Other it will go off. Yes.
Column A, I don't think it's online.
Is it on?
B, column B, data exchange. Record, see.
All right. All right. So column B, what is it telling us? There's a change here. Cash. Oh. Uh-huh.
Okay, Kansas English.
Right. So what narration are we going to give here? Yes. Yes, what narration are we going to give here? Yes. Yes. Yes, madam.
Loan has gone out.
You can see the change. The change in cash. Cash has gone down by 4,000, and then the creditors' value have also gone down by what? So if you are the one, how are you going to write this? Yes, my dear.
Okay, okay. Pay test by cash. I think all of that.
Easy. The first of all, language is what? Different. So we have paid what? Our suppliers or creditors 4,000 Ghana cedis by cash.
Who has the mic?
Who is having the mic?
The mic. The mic, please check on yourself.
All right. Now let's come to column C. Look at it. Column C. We are comparing column C with what? With B. Look at the any change with regards to land and building.
No.
What about motor vehicle? This equipment. Stock. Debtors. Any change?
Yes.
What has happened here?
Economically.
150,000.
It has gone up. Bank has gone up from 22 to what? 100 and what? 72,000. Well, all the figures are in thousands. Are you okay? So it has gone up by what? By 100 and what?
50,000.
What are the difference? It has gone up by 150. Are you okay? All right. So let's look for the corresponding effect. Now, any change here, cash? No. Then here, capital, any change? Loan, any change?
Yes.
What has
Yes.
happened? The loan too has gone up. So
150. Yeah.
when you come here, bank has gone up by 150. Loan too has gone up by what? The difference between the two is what? 150. What are the creditors? No change. Now, we have a change in bank and also change in what? No. What does it mean? How are you going to narrate this story? Senior, if you are the one, you are a fine boy. The guy is a fine boy. So give us fine narration. Yes. Okay, fine boy. Give us narration.
The bank, the bank issued a loan to who is that? Hen.
Is it Hen that is giving us loan, or the bank is giving loan to Hen, or which one? Look at it. Loan from Hen. Loan from Hen. Look at it. We have 200. Here we have what? 350. It means that loan from Hen has gone up by what? 150. If you look at our bank account, our bank balance has also gone up by what? 150. How are you going to narrate this? You know, you're not going to open any account. How are you going to narrate it? Right.
Loan of what? Took loan of 150,000 from Hen. Took took loan.
Yes.
Took loan of 150 by check from Hen. Is that it?
Yes. What I'm saying is that if you can write, and we can make meaning out of what you are writing, you are present. You are there. Are you okay? Yes, there is a hand online.
Yes.
15,000.
A loan of 150.
Rashid says a loan of 150,000 from Hen paid into bank account. That's from Rashid.
Very good one. A loan of what? 150,000 from Hen has been paid into what? The bank. That is all.
There's another one.
This one you can write. Everybody can write.
There's another one. There's another one.
There's another one online. The online people. Yes.
Bank account increased by 150,000 from acquiring a loan from Hen at.
Yes.
This is from his house.
You listen to this, you can make meaning, you can understand
There's
what
another
has
one.
happened, what has transpired, the business activity that has taken place. Yes, another one. The online people, let's hear from the online. Listen to them.
The creditor says deposited a loan of 150,000. Of 150,000 from them.
Yes. Are you getting the whole argument? Somebody want to ask a question.
Can we have more than one interpretation? Someone says, Hen paid back a loan of 150,000. Another person says,
No, but what is here? Can you say that loan from Hen? Loan.
So the bank, the bank.
So it means that the company is taking a loan. And after taking the loan from him, they go straight to the bank and put the money there.
Okay.
No, the cash, has the cash gone up? No, the cash is the same. Look at it. The bank has gone up by what? 150. And our loan from hen has also gone up by what? 150. The other people today are doing well. Yes. Yes. Focus on.
Okay, yeah, from C from top, if you trace it to bank.
These are totals, this one they are totals. So you don't expect it to be the same throughout. So forget about the totals here. And then this one. Are you okay?
But
Good.
please, are you clear?
Okay. So these are the totals. So please don't worry yourself about this one. Good. So that's the narration you are going to give. Are you okay? Then let's come to D. We are comparing D and C. Any change here?
Yes.
Land.
Change here. What is the value?
125.
125. So we should be looking for the corresponding what? Entry or transaction. What about vehicle? Any change here? Office equipment, stock, debtors, bank.
Yes.
What has changed?
Our money in the bank has reduced.
Our money at the bank has what? Reduced. What about cash?
Same.
Capital?
Same.
Loan from hand?
Same.
Creditors?
Same.
So the changes are the bank and also what? So how are you going to narrate this story? Yes. Now you give us a narration. Yeah. Okay. So Madam is saying that we are taking money from what? The bank to buy what? Land. Is she right?
Yes.
It's easy. Is it not better than opening accounts like this and then don't go with that? Now open view. Even the accounting is very interesting, very easy. So at this our level, we just have to understand. Good. So then we are comparing what?
E to G.
D and E. Any change here? What about motor vehicle? Office equipment? Stock? Debtors?
Yes.
Any change here with debtors?
No, it's not about. No, it's not about.
This debtors, remember this. What has changed? What has changed here? Has it gone up or it has come down? It has come our debtors, receivables, it has come down. What does it mean? If debtors balance has come down, what does it mean? They have what? So if they have paid us, then we should be having some kind of effect in our bank or what? Cash account. So let's see. Good. Has there been any change in our bank?
Yes.
What about cash? So the change is how much?
80.
80,000. When you look at it here, you can see it here. So how are you going to narrate this story? This transaction, how are you going to narrate it?
But you are receiving. You are receiving.
Yes. If you don't know, you feel accounting, you won't go to heaven.
Because you can't account.
It's so easy. I mean, it's easy for you. Yeah, so how are you going to narrate this? Hey, don't go and chew the food. If you pour what is there for me, I'll give you 0. Use your own word. Yes. Yes. Payment of what? From our debtors. To our what? Bank account. You know, what we are saying is at the end of the day, whatever you write must be meaningful. You should give a clear picture of what has transpired. Are you okay? And you'll be fine. At the end of the day, everybody will be fine. Come again. So, yes. Let's hear from those online. Yes.
Check. Received from debtors.
So 80,000 check received from debtors. Yes. There's another one online. Yes, let's hear from online.
Increased by 80,000.
Cash. Good.
Cash accounts increased by.
Is it cash or bank?
Cash.
No, this one is bank. Oh. The money has been paid into our bank account. So you should make a reference to the particular accounts involved. That is critical. In this case, we the accountants, we don't have good English. Are you aware? Accountants, their English are not good at all. So in this case, we don't mark grammar. Are you okay? We don't mark grammar. Have you identified the accounts involved in the transaction? Yes. And you have made a correct interpretation of what has taken place? Yes. Finished. That's not the time we'll be marking grammar. No. Okay. So where are we now? Yes, India. Mother, all we are saying is that give us a narration that gives that you see the fact that your game is not good doesn't mean that you didn't right. Yeah, we are saying right. No open the account. Right. Senior, I beg you, right. Good. Where are we? Okay, any change here? Land and building, any change? What has changed?
Reduction.
Reduction in what? Land and building. Good. Motor vehicle, any change?
No.
Office equipment?
No.
Stock?
No.
Receivables?
Change.
Receivables?
Bank.
Bank?
Yes.
What has happened here?
Increase.
Bank has gone up.
Yes.
Cash?
No.
Capital?
No.
Loan?
No.
Creditors?
No.
So what are the two accounts involved in this particular transaction?
Bank and land and building.
Land and then what? Good. How are you going to tell this story? How are you going to narrate this story? So land and building for how much? 300,000. And deposited it at where? The bank. Paying it into the bank. That's all. So you see that life becomes so easy. If this one comes in the exam, I'm sure everybody will get 20/20. Oh, this one, yes. Or we'll make it 10 marks. Hey, somebody say 30. All we are saying is try and make meaning of the particular transaction that has taken place. And you are good to go. You are fine. Then the next one is what? G and then what? Any change here? Motor vehicle, any change? Office equipment, stock, receivables, bank. What has happened here? Our bank account balance has gone down. By how much? By what? 350. Let's look for the corresponding effect. Look at cash, any change? Okay, capital. Then what has happened here?
We have paid off the loan.
Thank you. We have what? The loan that we have contracted from what you heard, yes. And how did we pay? By cash or by? Is it by cash or by check or by bank? Which one? Through the bank, by check. Are you okay? So we've paid, we've cleared our loan. Good. The next one is what? H and any change in land and building?
No. No.
Motor vehicle?
No.
Office equipment?
No.
Stock?
No.
Receivables?
No.
No. Bank? Cash?
Yes. 7,000.
What has happened?
That's
Has it gone up or reduced?
reduced.
By 7,000.
8,000.
Is it 8,000?
Yes.
Perfect. Now let's look at it. What about capital? And then creditors.
Okay.
Creditor, what has happened here?
That's reduced.
It has what?
Reduced.
So what has happened? How are you going to tell this story? Yes. Yes. We have paid our creditors by cash of how much?
8,000.
Please make sure you put the amount there. If you don't want to narrate or see anything, at least we need to see the accounts involved and also the amount. Are you okay? So that if we are giving 10 marks for those who put the accounts, the amount, and the narration, if you put the accounts without narration and then the amount, you get maybe 2/10. Yes, sir.
Okay.
The money is in dollars.
Oh, no. However, we are not training you to become professional accountants. You see, these things that we are doing, we are just intentionally making you to think with these things. Do you understand when we say check? It means we are talking about what? Banking transactions and so on. That's why we are both. We are not training you to become professional accountants. We are not training you so that when you go and then you collect the work of the accountant. No, that's not it. All we are saying is that understand what they do and appreciate what they do so that you can work with them in harmony. Are you okay? So, Chief, that's not the intention. Good. The next one is what? I and what? All right. What has happened here? Any change?
Stock.
Motor vehicle, office equipment, stock.
That's reduced.
It has what?
Reduced.
By
17,000.
by 17. Okay. What about debtors?
That's increased.
Debtors has increased by what?
12,000.
12,000. Okay, let's see if we have any other change. Then bank any change, cash any change, capital.
Has reduced.
It has also reduced by what?
Yeah. Five.
By
5,000.
by 5,000. Then loan, okay, this one is declared. Then creditors, any change? Good. So here we have a change here in capital. Also a change in what? Stock, stock, and also what? Debtors. What does it mean? I'm going to narrate this. Hello. Yes, fine boy.
So
Yes.
sold some stock.
Okay.
So the stock of 17,000
Uh-huh.
and paid off debtors.
Normally, when we sell to our clients. That's why you see that this thing has gone up here. The debtors figure has gone up by what?
12,000.
So the value of the goods that we have sold is what? So our sales here is what? 17,000. And we are selling it at what? How much are we selling it? 12,000. So at the end, we are making even a loss. So in this case, we are making a loss of how much? We are making a loss of what? 5,000. So anytime you are making a loss, you know, when you make a profit, it affects your capital. Your capital goes up. Do you get it? When you make a profit, your capital goes up. But when you make a loss, what happens? So you can see that capital has what? Gone down. By what? 5,000. That is the effect. But you see that the debtors figure has gone up by what? 12,000. Our stock has gone down, so we sold goods to our clients. And we have made a loss of what? 5,000. So you see that it's very, very easy. And in exams, if you happen to get this one in exams and you fail, I will fail you on top again. So these are the good. So just go through it again, play with it. These are suggested solutions to all that we have done. Good. So all the column A, B, C, D, E, F, G, H, I. Are you okay? Good. So you see that it's very easy. Any question? Any question? So in the exams, what should we be looking out for? Something like this or something like this? You like this one, eh? You don't want to be accountant, eh? So you like this one? Huh? You like this one? Or you want that to be in the two, eh? Okay, no problem. Don't worry. All right. Okay, so ladies and gentlemen, I think we've done enough for the day. And thank you so much for your cooperation, support, and everything. If God permits, next week we're going to take a different topic. And I believe that one too is going to be very interesting. Thank you very much for coming, and God bless you. Okay.